Welcome back to the What You More podcast. I'm your host, Quinton Harris. And in this episode, I'm going to break down the question I've continued to ask myself. What's holding back inventory in the U.S. housing market? Is it going to be the lock-in effect? Or is it going to be homeowners insurance? Or is it going to be the combination of both? And so I'll tell you where I'm going with this. In one episode, we did a deep dive on what the lock-in effect is and all the statistics that go along with that. I'm going to do a little bit of brief overview of that. And then I'm going to break down what's going on in the insurance market. And then I'll do a dive into the Florida insurance market. And one of the things that I think is interesting here is there's this level of comfort of people living in their homes right now. See, traditionally speaking, as people, grow in household formations, they move out and they go get a larger house or they'll downsize. And then you have the move-up homeowners as well. The move-up homeowner has kind of disappeared from the market right now, and they make up a large portion of the market. And the reason they disappeared is because they've gotten comfortable in their mortgage payment and comfortable in their equity position and also their interest rate. And I think maybe in that order, really, because, if you have a house right now and you have a budget and you're saying, hey, my payment is X, you're expecting that payment to remain inside of that X category with maybe a variance of 5%, maybe 10%, depending on what your property taxes have done. However, in some states, in particular Florida, that household budget now is being stretched because of homeowners insurance and the rapid increase in that's happened over the last 3 years, really. And so people that locked in that really low rate and received the benefit of that for maybe a year haven't received as much of that benefit over the last 2 years as maybe they thought they would. And that's increased their budget a little bit. And so couple that with the new rates that we're living in now, it's not just about the interest rates. It's about what is the payment going to be with the new insurance and property taxes associated with that. So let me kind of do a little quick overview of the lock-in effect and what I mean by that. So the lock-in effect is it's a notion that people are living in their current home right now, their current primary residence, because they're locked in to the interest rate on that home, meaning they couldn't necessarily go buy another home and transfer that current interest rate. Just some quick statistics, 90% of America has a 6% or lower interest rate. Rates in which we're making this podcast at the current moment are over 6%, in some cases over 7%. But let me dial it back here and kind of really reel it in. 80%, just shy of 80% has a 4% or less. That's the reality there. So that's a much larger number there. So, and when you're looking at that, that's that notion saying that group of individuals are locked into that interest rate and can't necessarily transfer that. And that does, we've done multiple episodes where we break down what that rate means on the same priced home versus what today's rate means on that same price home. And in some cases, it's a drastic difference in budget. And there hasn't been enough sway in the market to convince those people with the 4% to trade in that lock effect for the new home right now, or the ups, the move up home, if you may. So that's a quick overview of the lock-in effect. But I think the hidden gem in this lock-in effect that's happening is that budget and the budget monthly amount for what the mortgage payment is. So if your mortgage payment is, let's say, $3,000 with your principal taxes and insurance, principal interest taxes and insurance, PITI on there, you kind of budget around that as a household. If that payment was to jump to $4,000, well, that's a significant increase, and that's something that may throw the whole budget off because now you're sacrificing that $1,000 that you either were saving or using towards other disposable income items now has to go into your mortgage payment. That's a big reality check. And in some cases, that has happened. And, and I'll kind of talk a little specific to my own personal homeowners insurance and kind of give you some examples of what happened with that over the 3 years with just my insurance. And then I'll also give you some takeaways you could use to maybe reduce that. But let's start with why are we in an insurance conundrum? Well, let's go back to the beginning of COVID. Prior to COVID, people were at work and living their lives and kind of going about it in the old busy hustle and bustle. And then COVID hit. And we had significant downtime and people were working from home. Well, while they were working from home, you start noticing like cracks and things that need to be fixed. And all of a sudden, you're like, man, I've got time. I'm at home. I might as well file an insurance claim. Then imagine someone comes knocking on your door and they want to talk to you about a roof that they think you have damage on, or they want to talk to you about a roof that they can see damage on that they want to fix. And you go, oh, okay. And they're like, no problem. Insurance will cover it. And they have you sign some forms and, they'll go ahead and start the job. Well, what you're doing is we had a whole show on this with Ryan Locke, who's an insurance agent here in Florida, but you essentially are giving them the assignment of benefits. And so they would pose to your insurance company a proposal. And in some cases, the proposal for this roof was astronomical, more than it should have been. And they would ask your insurance company to pay for it. Your insurance company naturally would object to that cost. And then the roofer would bring in an attorney to sue your insurance company. Well, here's where the big problem starts, is that those attorneys, they were able to charge exuberant rates, more so than their normal rates, to actually litigate what that would be versus what they would normally charge. In some cases, it was 250% more per hour than what their normal rate would be. Why? Because they're going against an insurance company who either A, they know would pay it, or B, would settle. Well, this went on from about 2020, really, even parts of 2019 is documented all the way through 2022. Now, every hurricane season or storm season around the country, tornadoes, natural disasters, we recognize that there's going to be claims for that. But when there wasn't any of that and you're having massive amount of claims filed, that is something that the insurance companies weren't necessarily prepared for, much less the litigation portion of that. And so what happened is, over those 3-year periods, these insurance companies started saying, I'm out. Like, I can't do this anymore. This is ridiculous, especially here in the state of Florida. That's where the real conundrum started for Floridians, because we went from a multitude of carriers down to about 8 carriers, and then from 8 carriers down to about 6. And it took legislation to actually be passed to stop those attorney filings at those exuberant amounts to help kind of slow this down a little bit. Now, it didn't fix the problem, but it has slowed it down. So where I'm going with it is this. During that COVID period, while those claims were being filed and those lawsuits were taking place, Florida outweighed the rest of the nation by far. I mean, it wasn't even close. Almost every lawsuit that was filed against an insurance company was filed in the state of Florida. And it was pretty extensive when you take a look at it. But premiums increased 25% per year during that time. And for the remaining companies that stuck around in the state of Florida to insure, you started seeing these massive increases. And I'll just kind of give you some examples. On my own policy on my house, went from about $1,700 to $4,000 in 1 year. Now, keep in mind, I didn't file a single claim. I didn't ask for a new roof. I didn't do any of that. But because so many people in the state of Florida did, these insurance carriers had to find a way to pass the cost for what they were enduring as far as claims and lawsuits down to the consumer if they were going to stay in business. Now, that isn't something that I think that necessarily everyone was real excited to see. Matter of fact, I know they weren't, but it was shocking because it came without warning. And then the following year, they increased again. And so you take a look at just that example, $1,700 to $4,000, like, we're talking, that is a significant increase. That wasn't just a small one. And that can offset a household budget and change things. And I think that when you couple that with the lock-in effect, you're probably having borrowers go, well, wait a minute, I'm struggling just to get insurance on my current home. Am I even going to be able to get insurance on another home? Like, is that something that I'm going to be dealing with? Because what we were finding is that insurance companies were finding ways to drop people. I'm going to go back to my policy. So let me explain to you what happened. It went up to $4,000. I called my agent and I said, hey, why the jump? Obviously, quickly educated me on what was going on. I was aware of that, wasn't happy with it, but I understood it. And I said, okay, well, tell me what the assumptions on my home are. And I think this is something that's really important for homeowners to understand and future homeowners to understand, is that the insurance companies are going to take assumptions across the board. Then they're going to send someone out to inspect it and clarify those assumptions. Well, keep in mind, those assumptions that they're taking on aren't necessarily in your favor. For example, at the time when this happened, my home was 15 years old. And so they assumed I hadn't replaced the hot water heater. They assumed I hadn't had a new roof at all during that time. They had assumed that I wasn't manicuring the trees and that they were falling on the house. Like, seriously, this was a thing. The guy does a drive-by on my house, and I have like a small section of one little limb, literally like touching the gutter. This is the popular thing that's happened all the time. Just touching the gutter, not leaning on it, not protruding it, not damaging it, just like a leaf section touching it. They wrote me up for that and said, oh, no, that's going to be extra because you have that. even when as far as saying they were going to drop me because I had that damaging situation to my house, because essentially they just didn't want to fulfill the insurance policy. Like, how ridiculous is that, right? Well, in that assumption, I did replace the hot water heater during COVID, and I had a new roof put on 8 years prior to that I could document from storm damage. And literally that took my premium down from $4,000 down to $2,100 because I was able to document that. But again, in those assumptions, they were just putting me in a bucket and saying, hey, 15-year-old home, here's the stuff we don't think the average person is doing, and we're going to bump that premium up. So you have a way to kind of contest that. You can go back to your agent and say, hey, listen, tell me the assumptions. Let's go through some of the major things they're looking at. But then after you challenge it and get done, what I found was they tried to drop me right after that. And they literally were saying, hey, listen, he's got tree limbs hanging on the house. I got this notification they were going to drop me. We were doing a renovation. They said we were running a business out of our house. I mean, it was the most ridiculous stuff I ever heard. And it literally took extra time out of my day to defend all that and to have things done, because that's how ridiculous the insurance the insurance business had become here in the state of Florida. And it's becoming better, but it's not great. It's become better because they've slowed down the cost increases, but they're still there. They're not retreating back, and it doesn't look like they're going to retreat back anytime soon. It just looks like they're going to flatline from where they are, but that's a significant jump, and that's happening across the country, not just in Florida. I'm giving you an example here in Florida, obviously because it's easy for me to do because I lived through it and I went through it, but it is something that I tend to question of what type of impact is that going to continue to have on the housing market, because I work with a lot of real estate agents and search agents, and I literally have heard the terms, we couldn't get insurance on the house. I've heard it before, very rarely up until the last really 18 months. And now I hear it way more often than I should. I'll go to meetings where the insurance agent is talking about things that you have to look for now as a real estate agent or as a lender and as a home buyer, because we can't necessarily get insurance on that in the current market that we're in. Now, will reprieve come and will we get some relief in this? Hopefully in due time. But between now and then, I also think this is kind of a hidden pain point that is keeping inventory from entering the market. Again, going back to, if you own a home, you have a price, you have a budget for that home, you have a monthly payment that you're accustomed to, and all of a sudden it's gone up and you've made sacrifices to maintain that, the fear of thinking, well, I might not be able to get insured somewhere else now. And if I do, what does that look like combined with that new interest rate of the current market? It's kind of stretching my affordability beyond what I can't afford. And it doesn't make sense for me to move right now. When we go back to really pre-COVID, we really depended on that move-up buyer to create more inventory as they move up, and that home that they were in becomes inventory for the first-time home buyer. And the fact that that move-up isn't happening is really restricting that first-time home buyer's entry point of an affordable home, because people are sitting on what they currently have right now. So I think it's going to take a combination of rate relief, which obviously we talk about all the time on this show. It's going to take a combination of some premiums getting in line around the country. And for our Texas listeners, you guys, what you're dealing with in property taxes, that's unbelievable. Take what I just described and then multiply that times 2. That's what people in Texas are dealing with on property taxes right now. Not so much homeowners insurance as property taxes. And these fixed costs on a mortgage, which we always talk about, the things that are fixed costs, which should be your property taxes and your homeowner insurance, are now becoming variable costs, and that shouldn't happen. And that's creating pain point in the market as well. And in some cases, forcing people to say, hey, listen, I've got to sit still. I can't move. We can barely afford what we're in right now. No way we can make a move up home. And I think that is applying pressure to the inventory market. Now, when one of those things kind of maybe comes backwards, let's think maybe the interest rates could do it first. But again, some of these insurance premiums, this stuff's going to get corrected. So how do they correct the insurance premium? Well, you bring more competitors in the market, right? So we need more people to come back into the insurance market in the state of Florida. And all of a sudden, we'll see some of these premiums under competition come back down. But until that happens, we're not going to see that. I always kind of laugh about Allstate, right? They should say they're in all state except California and Florida, because they're not in either one of those, right? So we need bigger competitors to come back in the state and put competition back in the market, and that competition will lower these premiums. But I think interest rate dropping will happen first before that, and hopefully that opens up the market, and then hopefully in due time we get a little bit more of relief in the insurance side of things, to where we can see buyers having more affordability and easier time getting homeowners insurance. Guys, if you like what you're hearing, please 5-star review this podcast. Please leave us some comments. We do listen to them. We do read them, and oftentimes we bring them up in the shows here. We greatly appreciate that. Check us out, our YouTube channel at What's Your One More with the number 1. Until the next episode, we'll see you guys back at What's Your One More.
I got one more shot, I'm gonna make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got